Good morning. I want to welcome you to another segment of the Jermaine Brown Trading Show. Today is Friday, November the 29th, 2024. I want to start off by wishing everyone who celebrate, if you celebrate it, I hope you've had a wonderful Thanksgiving. If you don't celebrate, then I just hope you had another pleasant day. Um, the markets will be closing in about an hour. So I want to make certain that I get my trade in for the week. And again, I'm in my paper trading account because this is where I do all my practicing of trades before I, decide to use a live strategy. So I'm going to do a weekly trade on the SPX again. Ooh, the index went up about $40 today. So I'm going to click on the option chain. Okay. I'm going to do a 7 day. So December 6th, I'm going to go out to about a 10 delta. So I'm going to look at my delta. Again, 10% in the money, 10% chance of it going in the money. Excuse me. Excuse me. So I'm going to do the 59.20. I'm going to sell that at 490. And do the 59.10. I'm going to buy that at 430. So I'm going to collect about $70, 70 cents. Then I'm going to do the call side. 10 delta. This is going to be, again, another iron condor. The goal is to collect about $1. According to the strategy, you always want to collect at least $1. So I'm going to do the 61.35. So I'm going to sell that. And do the 61.45. So they're 10, I mean, 10 points wide, which is about $1,000 of that I'm risking to collect $155 or 155, yeah, $155. So I'm really risking 840 to make 155. And let's do that. Now, usually I would also do this this information in a spreadsheet to keep track of everything, but just the goal here is just to practice the trade. And also, I see that, it's working. I've had success so far on every trade. Now, I'm doing the SPX, but for those who work during the day and don't really, or is busy during the day, don't have time, and you have time during the night, the /ES, which is the futures version of the SPX, works as well. So the same strategy. So you could do the strategy on the /ES, which is the futures, or the SPX. It doesn't really matter. I mean, I do the SPX, but I can also do the /ES as well. Now, if you have under 25 grand and you're into day trading, the futures is the better way to go because you can get in and out of a trade or the same symbol without in the same day without having to worry about day trading rules. Where if you have over 25,000, you don't have to worry about day trading rules in stocks or equities or indexes. But if you have under 25,000, then you got to be careful when you try to do day trading to make sure you don't get dinged because that could hurt you. and they will limit you trading if you do it too many times, which is generally like three or more, about three times. Okay, let me lower this. Let me edit this because I want to make certain that this trade go through. So instead of 160, I'll do 140. I'm okay with that. Okay, that's working. Give it a few. So far, you can see that I've already made $160 with the SPX. Oh no, that's what I'm looking to get. I'm sorry, I haven't made that. This trade hasn't gone through yet. Sorry. Okay. Um. hmm, Okay. Why isn't it? Come on. I want this trade to go through. Go through for me, buddy. Again, so basically, I'm looking to collect about $140 for the week, which is fine. For a high probability trade. Again, the two brokerage sites that I recommend is just my personal preference. And again, I'm not telling people to go out and do this, but this is just something that I'm doing or I'm working on. Okay, 'cause I'm not a financial advisor, so I don't advise on nothing. But I'm just telling you what I'm doing. But the two brokerage sites that I recommend is Think or Swim, not and Swim, Think or Swim, which is this is the site right here, or Tasty Works, Tasty Trade. I personally prefer Tasty Trade, but they do not have a paper trading account, so that's why I'm using Thinkorswim. But in trading real money, I prefer Tasty Trade, and I'm just still waiting for gives me to find out when the money is going to clear in my IRA account, so this way I can start trading my IRAs. Because again, now I want to control my money, you know. So if you have a job, it's and I'm still not a fan of the 401ks, but what I do like about the idea of the 401ks, once you leave that job, you could transfer your 401ks over to an IRA, a traditional IRA, if you just have a traditional 401k, or if you have a Roth 401k, and I actually happen to have both, then I also could transfer that over to a Roth IRA. And I can now, when I transfer it over, I can manage it myself rather than paying those management fees to these corporations to manage your money, which I don't like doing. Okay, why isn't this filling? This trade should have filled by now. Okay, let's edit this. Let's do 1/3. Let's do 130. Maybe everything is slow right now and it's keeping it from working. Huh. Why isn't this working? I could wait until Monday to execute this trade. I don't want to do that, but I could wait until Monday. Let me see about the /ES. Let me see what's going on there. And this is the E-mini futures. Now, the beautiful thing about the futures, again, you don't have to worry about day PDT, which is the pattern day trading rule. You don't have to worry about that because they don't have that. Second, the markets open up on Sunday after 5 p.m. It closes at around 4 o'clock on Friday, and then it's closed on Saturday, but then it opens up at around 5 p.m. on Sunday. So that's the beautiful thing about dealing with futures. Not a future. I wouldn't do it with future. I would do option chain. There we go. Let's see, 7 days. Let's do a 10 delta on this. Then we're gonna do the 59.25 and 59.15. And then on the call side, do the 61.45 and the 61.55. And instead of 10, you'll just do one, or really two. I'm gonna do two. Let's see if this one goes through. One of these trades should go through. Now, why is it neither one going through? Something just went through. The /ES. So what I'm going to do is cancel this SPX one. I don't need both of them, just one or the other. So and I'm collecting more on the /ES anyway than I would have on the SPX. So the /ES went through, and so now this is a 7-day trade, and I will monitor it when if the future, in this case, not the index, but the future, if the delta goes above 16, okay, 0 to 15 is the green zone, so that means no adjustment is needed. 16 to 31 is the yellow zone. If it goes above 30, I will consider making adjustments. If it gets above 32 and higher is the red zone. So if it gets into that 35, I definitely need to start adjusting it, making adjustments to save the trade. But again, it's in a week, so we'll see what's going to happen. But if you like this, subscribe, give me a thumbs up, comment, let me know what you think. I beat the market in time before it closed on me, so we're good. This trade has gone through. Again, so I will speak to you later, or see you later, should I say. Good morning, good morning, good morning. I want to welcome you to another segment of the Jermaine Brown Trading Show. Today is Wednesday, December the 4th, 2024. I hope everyone had a healthy and prosperous Thanksgiving holiday there. And didn't overstuff yourself, eating too much and stuff like that. For those who celebrate it, for those who don't, then I'm not here to say whether you should celebrate it or not. That's not what I'm here for. I'm just here to give you some trading stuff that I do that I'm currently working on. Well, remember this past Friday, I executed a trade with the /ES, which is the S&P 500 futures. And the beautiful thing about the futures is that, well, number one, the futures market trade 24/5. So that means 24 hours a day, 5 days, 6 days a week. Um, well, 5 days a week because it's closed on Saturday and it reopens on Sunday. But well, it closes really on Friday and opens back up on Sunday. So it's 24/5. But during those days when it's open 24 hours that day. So for those who are busy during the day and have trouble trading during the day, you could trade at night and still do these same strategies using the futures. And so that's one of the reasons why. And also another reason why is if I start doing day trading. See, I was doing day trading without doing the futures. I was doing it on the SPX, SPY, whatever. The problem is that if I'm in a losing trade, it's hard to adjust that same day without getting hit with a pattern day trading rule because you got to have over 25,000 in your account to do day trading on non-futures, which means equities and indexes. But when you're doing it with futures, you don't have to worry about the PDT rule, the pattern day trading rule. So you can get in and out of a trade the same day many times without worrying about the pattern day trading. So that's what I like about futures. Anyway, so I put this trade on this past Friday to expire this upcoming Friday, which is 2 days away. Okay. If you remember, I had did a 10 delta on each side. I click on option chain and we'll click on expiration. And let's see where the stock is trading at, or the future is trading at. Okay, so remember when I sold the put spread, which is 20 points wide, or really 10 points wide, sorry, 10 points wide. So the put spread, where I did a 10 delta, right now it's a 2 delta. It's at a 2 delta. So that means I'm making money on that put side. The put side is worth a lot less. Now, what about on the call side? And really for the futures, I should have did a 20-point wide, not a 10-point wide. So that was where I made a mistake, but it doesn't matter. I'm at a 9 delta on the call side. Now, technically, I could close this trade out for a profit. But what I'm going to do is adjust this trade. I'm going to see if I can hold into it until Friday because I don't think either side's going to really get hurt by it. So what I'm going to do is adjust the put side. So I'm going to roll this put side up to about 605 to 595. So that's what I'll do. So let me roll up the put side. Let me see. Why is it not allowing me to roll this position? Let me do it this way. As you can see, this is where this is the graph. So it is approaching more my call strike. But let's see. I should be able to roll. We can take out the calls. Okay, so it's not allowing me, it's not giving me the option to roll. So, okay, what I'm going to do is buy back the put. So I'm going to close the selected, close this trade. So buy back for 15. So I'm going to pay $24 on this, and that's okay. That went through. So now what I'm going to do is do the same expiration. And I'm going to make sure I do a 10 delta. So I'll do the 610. I'll sell that and a 6,000. Buy that, and we're going to do one. So we're consistent. And so I paid back 24 cents, $24, and I'm going to collect another 75, or really 33. So yeah, I'm good. I forgot the futures trade a little differently. Okay. So that's another way to roll the position. So basically, but I ended up paying two commissions. But what I did was I just rolled up the untested side, which is the put side. So now I'm collecting more premium. So that adds to the profit that I'm going to make on this trade. And the reason I'm not touching the call side, even though it's closer to the call side, is because the call is at a 9 delta or a 10 delta. So it was basically where I started off at. So no different. So, and this trade expires in 2 days. So it's not in a position where it's being threatened where I have to, make an adjustment. Now you would say, okay, well, so far this has basically worked. And this is again, think or swim. And and I do the two brokerages that I personally recommend, that I personally deal with. And I mean, I deal with other brokerage houses as well, but my two favorite ones is Thinkorswim and Tasty Trade. I personally prefer Tasty Trade amongst all of them, um, because it's easier to navigate. And what I like about Tasty Trade is that they came with a new feature, because this is Tasty Trade. And this is a traditional IRA account. I'm getting ready to put some money into this because I'm rolling over. One good thing about losing my job, I mean, I lost my job, and that kind of sucks. And I like the job, but the one good thing is that now I get to roll over my 401k into my traditional IRA, and I can avoid paying the taxes on the rollover. So that's good. So that's right now in the process of being handled. But they offer a back testing tool, which is new. They've had this now for the past couple of months. And what this allows you to do is test out your strat. How would your strategy have played out given a time period, right? And so let's click the symbol, and I'm going to use SPX. Let's see if it gives me the ES. Oh no. Oh, these are just stock symbol. Okay. So I'm going to use the SPX because it mimics close to the ES. So it's pretty much similar, very similar. So let me do SPX. I'm sure they're going to have futures on here too. And remember, this is still a new feature that they're offering. But now I'm going to do, instead of past 12 months, I'm gonna do the past 5 years. Or if they have custom, they have custom. Okay. Let's try. Mm, 2000. Let's see if it can give me that. 2013. Okay. So that's far as back as it'll go. Okay, 2013. And we'll do the 28. Okay, that's fine. Now, and I'm going to do a short iron condor, which is a neutral strategy. So you're going to sell the put. We're going to do a 10 delta. This pyramid here is like for deltas. I'm going to go three. Let me see something. Yeah, three deltas wide. So they three deltas wide. So that's good. And then I'm going to buy the seven delta. This is going to be sell the call, 10 delta, 7 delta. How would this have done since this time period? And the expiration is 7 days. And on specific days of the week, let's say if I do it on a Friday, limit the number of active trades. Okay. Um, you're gonna take profits at 50%. Let's assume 50%, because that's what Tasty Trade teacher take profits at around 50%. And let's run back test to see how it would have done. It's still working because it's an 11-year time period. Now remember, the markets tend to move higher or be bullish over time. And I'm using a delta neutral strategy, which means I'm using a strategy that's more for a stagnant market. So technically, I'm going to be wrong as to the market's direction quite a few times throughout the years using this particular strategy. But the question is it still profitable or is it not profitable? Okay. Well, if I did it over the last 11 years, this shows that this is not a very profitable strategy because why? Over the last 11 years, which includes both bearish and bullish market, I'm using a neutral strategy that goes against what the market is doing. So, what if I now, instead of doing an iron condor, which is a delta neutral strategy, what if I just do a bullish strategy, which is just a put spread? So, I'm going to do a new back test, and I'm going to take out the call side, and I'm going to use the same parameters, and I'm going to run a back test. Is my strategy successful? Now, remember, this is all assuming no adjustments. You just put the trade on and you do not make no adjustments. Obviously, if you can learn how to make adjustments, you can improve on these returns. But this back test assumes no adjustments. It's just you put the trade on, and when it meets certain parameters, you're taking it off or whatever. That's basically what the back testing is judging this off of the quality of your trade or the quality of your strategy. I should have did a little shorter time frame though, because this takes forever to like load. The longer the time frame, but it's okay. Okay. So as you know, the orange line, the orange is profit and loss, and this is the what the SPX closed at. So now let's see what the numbers look like. Okay, so the average profit and loss is $20.61. The max drawdown on a $10,000 account or capital use capital is 8,000. That's quite a bit though, 53%, or really almost 54% drawdown. That's quite a bit. Um, Now let me look at the details. So out of 598 trades, almost 600 trades, 574 was profitable. And I should have looked at this with that iron condor, but I forgot to look at this. The profit rate is 96%. So 96% overall profit for the last 11 years, just selling a put spread. The largest individual profit is 597, 24 trades with losses. The loss rate is 4%. The largest individual loss is 3,322. And again, this is assuming you're making no adjustments. This is just if you put the trade on. Average return per trade is about 0.6%. Average days in trade is 4. So that means we put it on for 7 days, but we took it off in 4. Okay. So in the total capital use of 10,000, the profit and loss is 12,322. So that means you're making a nice little gain. Return on used capital is 123%. Obviously, the max drawdown is 53%, 54%. You make it look how much premium you collected. Almost $70,000 in premium. And you're paying out in fees a little over 1,700. Okay, let's look at the logs. Oh, this allows you to like download the to a spreadsheet. But what I like is that it tells you how profitable your strategy would have been over a given period of time, and that's good. Um, so what this is really saying is that the iron condor is not the best strategy to utilize when in a stock when or a market that's kind of bullish. But again, if you know how to make adjustments, then the iron condor is fine. But if you don't know how to make adjustments, it's better to be bullish when the market is bullish, and when the market turns, know how to put on a bearish strategy so you can make money in the bear market as well. So that's all that is saying. If you know how to make adjustments, if you know how to make adjustments, then you can be profitable using even a neutral strategy in a bearish or bullish market if you know what you're doing. Um, or depending how bullish and how bearish, because obviously this here is big old COVID when the market really tanked down. Okay, there are periods when the market tanked down. Um, there was down periods in the market. So, but overall, excuse me, you would have done well. So right now, I'm getting ready to pull on a trade though, and I'm going to do an ES 1 day trade. This will be for tomorrow because I want to practice doing a 1 day. And matter of fact, you know what? Let me do it using Tasty Trade. Let me do /ES. Okay, we'll do a 1 day trade here. So the after money is 60.88. See. So what if I do 60.80, 60.90? So I buy that and I buy that. Oh, I don't have futures capability in my IRA. Okay, so um, I have to apply for that. All right. All right. So then let me go from my IRA. Then let me go to one where I do have a little something. Okay. So they're saying it's 2450. This is considered a one standard deviation move, which is a little higher than this one here. So I'm going to use this one. So matter of fact, let me do a spreadsheet real quick. Okay, this is an Excel spreadsheet. So the forward slash, the hell is going on here? I can't type. The hell's going on here? I got to figure out what's going on. Okay. Okay. So it's 2450, 2475. Let me pull up a calculator. So 2450 times 2 is $49. So multiply this by 2. So that's a 2 standard deviation. So what I got to do is to now subtract. Wait a minute. Okay, if I choose to do it this way, you know what? I'm going to go to a 10 delta. Now, let me just do it this way. It's easier. 10 delta. I don't need to complicate matters. Okay, we'll just go to a 10 delta. Just do it the way you've always been doing it, Jermaine. Trying to get a little fancy. Come on. Thank you. So I'll do the 60/40, and this is one day. I'm going to do 20 points wide. So it says 60/30, 60/20. It's 95. Let's do 2 contracts. Actually, do it here, 2 contract. And then I'm going to do a 10 delta on this side. I can't do a 10 delta, so I'll do it 8. So it's 61/35, 61/25, 35/45. So 180, let's see. I should collect $100 after fees and commission. That's good. That's the rule. Now click send. Let's see if I get filled. This will be a 1-day trade. It got filled, so perfect. So now let's see what happened. Okay. Activity. Okay. Actually, I should have did a different symbol. for this one day, but it's okay. You can see, notice that it's combining both my 1 and 2 days trade that I have, the remaining. So it's all right, but I just know now to just tomorrow go and look at the one day and then just separate that from the 2 day trade that's remaining. But this is right now what I'm currently doing, or I'm practicing on at the moment. And we're going to see how profitable or non-profitable it is. I'm just going to keep, practicing this for a while before I decide to use this in my retirement account. Because again, when you deal with your retirement account, hey, it's the account you're going to live off of when you're no longer working. So you got to be able to have the ability to make money. If you have the ability to make money when you're no longer working, that's a good thing. So anyway, I hope you like this video. If so, give it a thumbs up, subscribe. Give me, you can leave a comment. If not, you can still leave a comment, whatever. And I hope you have a good day. I will speak to you later. Good afternoon. I want to welcome you to a continuous segment of the Jermaine Brown Trading Show. Today is Thursday, December the 5th, 2024. Technically, the markets close in 22 minutes. The stock market does, but because I'm trading the ES futures, which is the S&P 500 futures, they stay open until Friday till 4 p.m. So they're open for at least another 24 hours. 4 or 5 o'clock. So anyway, this is what my current trade that I did yesterday, which was a one DTE, which is 1 days to expiration. This is what it looks like right now. Is profitable. I could technically let it expire because it's not going to go past these today. But what I'm going to do is I'm going to go ahead and close it out and take the profit. So this is the iron condor that I put on yesterday, which was a 1 DTE, which is now a 0 DTE. And tomorrow there's 1 days to expiration left on these. But I'm going to leave these for right now. But what I'm going to do is I'm going to close this. Let's click on review. Okay, let's put a couple of cents. We'll put 5 cents. Let's see if it'll close. So I'm going to be paying back $23 in the debit, which is fine. Because remember, I collected over 100, so and I'm paying back $23 of it. Let's see if it'll fill. And it did. It filled so good. Just wait and see. See, so now I just have tomorrow's position that I got to worry about. And this is going to be most likely profitable as well. So what I'm going to do is probably close this out tomorrow. Or what I might do, and notice how my profit or loss, I started off at 200,000. This is paper money. I wish it was real money, but it's not. It's paper money. And already I've made over $1,000 in just a couple of weeks. So I'm going to continue doing this, practicing, getting exposure to this. So what I'm going to do, but what I'm going to do is I'm going to do the S&P 500 instead of the the ES. And I'm going to do a 1 DTE expiration, which was for tomorrow's expiration. So this is a 1 DTE. Now it's got 18 minutes, so let's see if I can do this real quick. Right now, this is saying it's expecting about $32 in a move. Let's see. It's at The current price is 60.81. 60.81, as you can see over here. So what's the at the money? 60.85. So let's do 60.82. So we're gonna do at the money, ask here, then ask here. So this is 29. The 29.40. So we're gonna go to 29. So 29 times 2 is 58. So I'm going to subtract $58 from this. But well, you know what? I could subtract and add $58 to this to set my short strikes. You know what? Let me do it that way. So $58 is $60 and 88.7653. So 60/20. Let's do it around 60/20. And then we're going to do 10-point wide. So 60/20 goes to 60/10. And I'm going to buy that. And then okay, 60/20 and 60/10. Buy that. And then I'm going to do on the call side with $60, 8, 9, 10, 11, 12, 13, 14, 61.40. Mm. So it's 65 cents. I would have collected at least $1. So let's move this up to wait a minute, something is wrong. Give me a second. I'm going to move up the put side. 60. That's $1.10. That's a 13 delta. 13 is a little high. So let me do 60-30, 60-20. That's 75. So 60-35, 60-25. That's 85. Okay. That's a 7 delta. So I'm going to do this for one day. Got 12 minutes remaining. Collect about $1.15. This will be a 1 day trade. And it went through. Notice my call is at a 7 delta and my puts is at an 11 delta. It's a little bit higher than I would like, but I'll take it. This is a 1 day trade. Let's see if we can manage this. And this is before the market closed, so this was good. This is the SPX index 1 day. So I have the ES and the SPX. So I collected $1.15. Actually, they gave it to me at $1.20, so I'll take it, which is good. They gave it to me at $1.20 or $120 because it's 100 shares. So this is good. So let's see. Okay. So let's see exactly what happens tomorrow. Do I get a chance to take both of them off, or do I have to make an adjustment to the SPX? So we will talk again tomorrow. Again, if you like it, give me a thumbs up, comment, subscribe. Again, I'm just waiting to, I'm ultimately planning on doing this. If this continues to work well for me, I'm planning on doing this in my retirement account because this is great. Um, I will talk to you later. Peace out. Good afternoon. Good afternoon. Good afternoon. I want to welcome you to another segment of the Jermaine Brown Trading Show. Today is Friday, December the 6th. Today is Friday. Wow. Wait, these weeks are going by fast. Today is Friday, December the 6th, 2024. Yes, me. I am I'm in two trades that's scheduled to close out today. One was a trade that I put on, I believe, yesterday. Yes, I did for the SPX. And here's where the positions are at. Okay, the SPX is right here. Okay, so I got the 60-25 put, 60-35 put. So as long as the stock, what I'm saying is the index, sorry, as long as the index stay above 60-35, I'm making money. And I got the 61-30 call and the 61-40 call. So as long as the stock stays below 60, the index, keep calling it the stock, the index stay above, I mean below 61-30, I'm making money. So basically, I'm saying as long as the index is above 60-35 and below 61-30, I'm making money on this trade. As you can see, the index is at 60-85, so it's like towards the middle. If I click on this, you'll see, if I go all the way down here, this is the graph, and you can see that I'm right in the middle of the pro. Now, technically, I could roll this up, make some rolls. Like, for instance, if I want to make an adjustment and let this expire worthless, I could simply say, okay, I'll roll up, say, the put side. See, so right now, let me click on option chain. This is again Thinkorswim. This is a trade that I am seriously considering think about using in my retirement account. Let's see if I want to roll up the put side. Okay, so with the index at 60.84, my puts is currently at a 2 delta. Now I can roll it up to about a 14 delta, but then that would be putting it close to the market. And I don't want to do that. See, like for instance, I can roll this up. I'll show you. See, roll selected. So I'm just rolling up my puts, which is currently at a 2 delta. So I'm buying back these two positions. And let me see if I'm rolling my delta up, say to a 960, let's say 60-70. So I'm going to sell the 60-70. I'll leave the expiration, roll this up to 60-70, and then roll this up to a 60-60, keeping it the width the same as the previous one. See, I could collect an extra $215 or $210 in credit. See, so that's how you roll up a position. But technically, why would I roll it up? Yes, I could collect an extra $200. But the problem is now I'm getting closer to at the money. Because if you pay attention here, see if I rolled up to the 1670, right? I rolled up my short put, and that's the put you have to concern yourself with is the short put to 6070. That will put me here. Now, here's the at the money. So now if the market turns, now I got to readjust again or get out of the position. So right now, I can let this expire worthless. And I'm going to pretty much do that. rather than close out well, I could close out the trade and take the risk off the board totally. So, I mean, you know what? Let me do that instead. Close selected. So I'm going to pay about 10 cents. I'll pay about 10 cents or $10. 14.50 in debit. Close it out. Now, what I'm doing is I'm taking that whole risk off the board. It's right now working at the moment. I want it to fill. Take that whole risk off the board. Rather than just because see, that's the funny thing about the condor. When you have an iron condor, you got four legs on. I could roll it, but then I got to roll it in pieces, and I'm going to ultimately still be paying an extra commission anyway. So I might as well just close it all out, get the risk off the board, and then just simply create a new position. That's just much more simpler than rolling out all four legs. Wait, excuse me, he didn't give me the permission to do it that way. So I would have to roll it out in pieces. Okay, why isn't this? Let's try it this way. Let's go more towards 20 cents. I'm okay paying 20 cents, $20. Because I already collected quite a bit anyway. So just want to get this. I just want to get out of this position now. Close out this position. And now we're still working. That should have closed. Okay. As far as my ES is concerned, this was a weekly. Let me click on my ES while I'm sitting here waiting on, and you can see this is how my ES is looking. So what I'm going to do is close this out as well for profit. Must have a price. Okay, let's see if it'll allow me to close out. Worst case, I'll have to take this off by pieces, which I don't really want to do, but that's right now what it's looking like. But in the meantime, what I'm going to do, okay, so that finally worked. And that's the ES. I, that's good. So, So now I have just the SPX. But what I'm going to do, so I got that cleared out, making a profit. So what I'm going to do is I'm going to do a 1 DTE SPX. Or in this case, a 3 DTE, because the index will be closed on the weekend. So the way O'Brien likes to do it is he likes to take the current at the money. So it's at 60.85. So this is considered at the money. Buy that, buy that. Okay. So that's 22.90. So let's round that up to 23. So you're gonna take a calculator and do 23 times 2, which is 46. So basically, that 23 means that's just like a, a backhanded napkin way of calculating the one standard deviation move on the trade. So what they're saying is going to move about $23 to one standard deviation, up or down. So by going times 2, we're really doing a 2 standard deviation. And here they're saying, Thinkorswim is saying 25.51, but we're going to use the napkin version of it of 23. Um, if we do, so that's one. So the calculator states that it's $46. So that means we're going to subtract $46 from this price, and we're going to also add $46. That will tell us where we start our wings at, where we do our sold put. So in this case, on the downside, 46 minus 87 is 41. So 60.41. So we'll do the 60.40. So we'll sell it there. And then 10-point wide, 60.30. So that's fine. Then on the upside, we're going to add 46 to that. So 46 and 87, 7, 8, 9, 10, 11, 12, 13, 11, 12. So that'll be 11. Let me see. So that's 134. So 61.34. So 61.34 would be where we do the sold strike. Sell that and buy that. That only gives us $55. Okay, let's see where we could. Oh, that's only a 4 delta. Okay, so what we're going to do is move this up to at least an 11 delta. And that gets us over $100 that we're going to collect minus fees and commission. You want to get, because the rule that O'Brien teaches is to get over $100 minus the fees and commission. So this should do the trick. Um, so let's review and let's see. So it gives us $110. Let's see. Mm, This is how it would currently look. Notice that I'm kind of more towards the I'm a little bit on the bearish side. 'Cause I'm closer to the sold call, but that's okay. Let's see if I'm right. If the stock continue or the index continues to go higher, I will have to make an adjustment. Now, that was a 1 day SPX. I'm going to do a 7 day, um, let's say RUT, even though he would really use the SPX, but I'm going to use the RUT so this way I can break it out. Okay, so currently 2405, 2405. So we're going to do that currently at the money, at the money. So we're saying, let's call it $50. So that'll be $100. So I'm going to go up 100 and down 100 from this price. Okay, delete this. So it will be 4306. I mean 2306. And let's do 10 points wide. Oh, that's only giving me 32. I'm going to have to adjust this. And 24, so 2506. 92. I got to collect at least $1. So I'm going to roll this here, the put side up to 22.95. I mean 23.05. I'll roll this up to 23.10 and then 2300. Hmm. Okay, 2310. Nope, 2320. That's 107. Now let me see what that puts me at an 8 delta, so that'll be fine. Review just gives me a little bit, barely over 100 after fees and commission. So we're going to go ahead and put on this trade. And it filled, so that's good. Now the RUT is the Russell 1000. I mean the Russell 2000, sorry, the Russell 2000. And this deals mostly with tech. This index deals with tech. And again, the goal here is not to own the shares. This is basically to get income cash on a weekly basis. Let me see. What does my position look like? Here's what it looks like currently. And so as one side gets threatened, then that, or the other side, I have to be prepared to make adjustments. Again, putting on the trade is the easy part. It's knowing when to make the adjustments. Right now, I use it off based off of Delta. I'm going to be making my adjustments off. So 0 to 15 is the green zone. Green zone, that means you don't really have to adjust. You can adjust if you want to, but you don't really have to. No need for an adjustment. 16 to 30 is the yellow zone. The higher up in the yellow zone it gets, like anywhere past 20 and above, you might want to consider making an adjustment. And obviously, anything over 31, 31 and higher is the red zone. 30, anything over 31, you definitely need to start looking at making adjustments to save your trade. So basically, that's just how this works. And let's see how my positions look now. So let me see what is working. So I'd look to collect $1.15, and this one is still not clear yet. So let's go towards 110. Let's see if this clears. I'm just adjusting. I'm trying to get into this trade. This trade, this one, the SPX will expire on, is scheduled to expire on Monday. It should fill any second now. Here, if you notice the RUT is December 13th, which is 7 days away. This SPX hasn't cleared yet, which is kind of annoying that SPX, which is that's for today's expiration, get out of the way so this way I can clear out this trade. The goal is to churn them and burn them. Okay. Here, the goal here, what I'm doing with this practice trades is the goal is not to own shares. I mean, I already know how to do that. I know how to make money off of owning shares. This is just learning how to execute 7 day, 1 day type trades without owning the shares. Eventually, I'm going to learn how to do this using 0 day. Because see, in the past, I've been trying to do that, but not doing it properly. It cost me, some money. I made some bad trades in the past because, see, getting into the trade is the one thing. It's knowing when and how to adjust. But the problem is when you're doing a 0 DTE trade, which is 0 days to expiration, you have this thing that is called, when you're trading indexes or equities, there's this thing called the PDT, which is the pattern day trading rule. And it states that if you have an account under 25,000, excuse me, under 25 grand, you're limited to 3 pattern day trading rules within a week. Anything over that, they go lock your account, and you do not want that. So it would be opening and closing a trade on the same day. Now I can open a trade today and close it tomorrow. That's fine, but I just can't open a trade and close it the same day without getting hit with a PDT. And too many of those, they will lock your account. So that's what I was trying to do before because it's a quick way to make money. But you have to understand how to make adjustments. And the problem is you can't adjust if you have an account under 25K because now you're going to fall into that PDT and they're going to lock your account. So I was forced to just take the loss, and that was never a good thing. Where if I use futures, and I just started learning futures midway through this year, but if you use the futures, I could have gotten around that PDT rule, but I didn't know that at the time. But by using futures, futures that doesn't have that PDT, the pattern day trading rule, so I could day trade futures, which would be like the forward slash ES, which is the S&P futures S&P. So it's similar to the SPX, but it's the futures version. And so I could have used that to do my pattern day trading without having to worry about not being able to make adjustments. But the key to trading is just managing your risk. Because, see, people look at it and say, oh, this is risky, that's risky. There's no such thing as a risky investment, only risky investor. Because all investments, if the investor knows what he's doing, he can manage to eliminate risk. But when you don't know what you're doing, anything you invest in can be risky, whether it's real estate, stocks, or any other type of investments. It's not the investment that didn't work, it's that you didn't work. So to really get good at this, you have to really work. You have to study. You have to put the time in, and that's currently what I'm doing. I mean, I wish this was real dollars here that I'm using, but eventually I will be doing it when my retirement account clears in Tasty Trade. Um, I will be doing these strategies eventually in that account. And so if I can make it work with the paper trading account, I can make it work with the real account because it's really the same thing. Okay, why isn't these trades clearing? If this, I'm going to leave this SPX Iron Condor. I'm going to leave these trades alone. I'm not going to do anything. If it doesn't clear, I mean, if the trade doesn't go through today, then I will just execute on Monday a 1 day trade for Tuesday. So that'll be the other way around it. I'm trying to practice 7 in 1 day trades because I mean, if you can get good at it, then eventually you can get up to the day trading because now it's just about managing the trade and adjusting. And day trading, you'll say, well, what if you have a day job and you can't really, then day trading doesn't work for you for the SPX if you have a day job because you need to be monitoring your positions when you're doing day trading. But what you can use is the forward slash ES, which is the futures again, and you can day trade that because that is open at night because it's open 24 hours Monday through Thursday. It's open 24 hours. It really opens up on Sunday after 5 p.m. So after 5 p.m. on Sunday, it's open for 24 hours until Friday afternoon. The forward slash ES. So you could trade that at any time. So if you are available at night, you can day trade that forward slash ES at night. So, they give you options, no pun intended. Okay, I want to thank you for watching another segment of the Jermaine Brown Trading Show. If you like what you're seeing or what I'm talking about, give me a thumbs up, leave a comment, subscribe. This is just for educational purposes only. This is just showing you what I'm currently doing or what I'm working on and what I'm actually have been learning. Sometimes you gotta go back to class, go back to school. Um, and so this has definitely been working for me because I do like weeklies. I like the idea of getting paid weekly rather than monthly. You know, um, I like the idea, excuse me, of getting a weekly check, weekly income. I just like that idea, so that works for me. The day trading or 0-day DTE, uh, that's not really my style as of yet. I mean, I still want to learn how to do it. So if I do want to make a money in a day, I know how to do it, but that's not something that's going to be one of my main strategies. That 1-day DTEs, I might consider that and as my short term, but definitely the 7-day. I like that. I am a big proponent of that. Getting paid on a weekly basis with the 7-day. Well, I will speak to you later. Have a good day. Have an excellent weekend and ready to rock and roll next week.